Hi, welcome back to the Kaiser Report. I'm Max Kaiser. Time now to go to Leah McGrath Goodman. Leah is an award-winning journalist who has written for Forbes, The Wall Street Journal, Barron's, The Financial Times, The Guardian. She's also the author of The Asylum, The Renegades Who Hijacked the World's Oil Market. Leah, welcome back to the Kaiser Report.
Thanks for having me.
All right, Leah McGrath Goodman, if the U.S. is now an oil exporter, why is the price of gas at $4?
Price of gas is at $4 because we are now pegging our fuel prices to the overseas benchmark, which is European oil, which is $20 a barrel higher than over here in the U.S., which is really convenient for those who are selling fuel.
That sounds wacky. Why are we pegging to that overseas Brent when we should be pegging to WTI, West Texas, good old West Texas Intermediary?
I think the West Texas Intermediate has been broken for a while, and it's been widely acknowledged by those in the market, but it's been taking a while for it to catch on. It was Saudi Arabia that first sort of deserted it, then Iraq and Kuwait followed, and then Wall Street just decided, well, it's a mess, and we're going to start pegging everything to the overseas one that costs more, which is very convenient. The oil drillers here who are refining gasoline are now selling it on the global market and making sure that it's going to be priced at the higher price, not the U.S. price, which is a lower price.
Right, so the WTI price was the benchmark, but it became, the Brent became the benchmark. Saudis came in, they are now trading on the Brent as the benchmark, even though as a benchmark, it's not as good. It's an inferior quality, and it opens up this huge arbitrage where people are trading paper for paper on top of paper, wherein the underlying market for oil itself gets highly distorted, right?
Yeah, more to trade for the traders, that's true. And the Saudis in Kuwait and Iraq are pegging it to something called the Argus Index, but it's similar, it's sour, Brent is sour. It's the US, it's the sweet oil. It's actually supposed to be the more valuable oil, but it's been gamed to death, in my opinion.
You say gamed to death, well, you mean speculators, right? Like Goldman Sachs, Morgan Stanley, they're in there paper on top of paper, and they have gamed it so heavily, they've destroyed it as a benchmark.
Yeah, and the oil companies have done a good job too of controlling the pipelines and doing things that maybe aren't really useful to the rest of us.
So Leah, explain to me who actually benefits from this WTI, which is trading at a 10% discount to Brent. Is anyone actually able to buy at that price?
Yes. And up until recently, ConocoPhillips controlled the Seaway pipeline, which, if you imagine, it's the pipeline from Cushing, where all the oil is kept, the largest amount of oil in the U.S., and pipes it out to the Gulf. But what was happening was they were only piping it in to Cushing, and it depressed the price of WTI. So it effectively overran, and they were able to then pipe it to the refineries, buying it for the lower price, putting it into the refineries, and then selling it at the higher gasoline price on the global market. So it was an arbitrage play for them. They just sold the pipeline, so those who are now going to take over the pipeline, they can do the same thing.
Now, your book is called The Asylum, and The Renegades Who Hijacked the Oil Market. You're implying there that the people in this business are crazy. Now, what's happened in the last few years, has it gotten any less crazy or more crazy?
Well, I want to say the traders called it The Asylum. They named it The Asylum, so I think they were trying to self-deprecatingly call themselves crazy. But is it still crazy? Yes, I would say very much so.
Has the crazy quotient increased? And can I buy crazy quotient on the market?
No, I don't think you can buy crazy quotients yet. But I do think that in a way you can say it's more crazy because we know now what's been going on and we're still not doing anything about it. So it goes to show you that there's almost a level here that we've gotten to that's superior to the one before, where there were a lot of people still didn't understand. I think that's not the case anymore.
All right, so tell us about 2009, when Saudi Arabia stopped pricing their oil in West Texas Intermediate benchmark. What is the WTI? Why did the Saudis stop pricing in it? And what significance does this have?
The Saudis had been complaining for a long time privately about speculators running amok. As we know, oil prices went to over $147 in 2008. Then later in 2008, they went to almost $30. And if you're the Saudis or anybody who's producing oil, you're like, we just want a stable price for this. You know, we don't want it to be, 150 and then 30 and then who knows what it's going to be. They're heavily reliant on oil. So they decided enough. And they decided not to price it against West Texas Intermediate, which is the US benchmark. And now they're pricing against an Argus index of sour crudes. And so they kind of threw it away. Iraq also said, yeah, we're going to do that too. Kuwait said, we're going to do that too. Then Wall Street said, well, if nobody cares about the benchmark anymore, we're going to start pegging everything to Brent because it's higher price. And the airlines finally figured out what was going on last year when they got seriously screwed on their hedges. They were still using US oil in their hedging, and they realized that nobody else is using it anymore, and they lost money.
So Goldman Sachs driving up the price to 147. They caused the Saudis to essentially break their link to the petrodollar. And that is a key component of this economy going back decades, that petrodollar link. So now that's now been dismantled. Yeah,
I mean, we've kind of wrecked our market, and it's sad because our oil is the highly valued kind. It's the kind that is refined more easily. It's sweet crude oil. The overseas benchmark in Europe and Saudi Arabia, it's sour. So it shouldn't be priced higher than our oil. Our oil is basically becoming just not respected, because this market is not respected.
Our oil is getting completely dissed on these world markets.
Yeah.
Basically. Now, what about the airlines? They're obviously impacted by oil. What's going on with them?
More of them are starting to hedge. So what they do is they try to hedge so that they get paid when fuel prices go up. They'll get paid out a certain amount of money that will offset what they're losing in China.
Okay, but when these airlines go into the hedging business and they're hedging against these markets that are fabricated and they're not actually responding to real supply and demand, they end up actually into the maw of Wall Street. They end up captive of Wall Street, don't they? Because Wall Street comes to them and says, we got these hedging products, and now, like all these corporations in America, they're reliant on their cash desk, their money market desks, driving their profits and revenues more than their underlying airline business, right?
It's really sad that all these corporations are forced to hedge because we can't trust our market anymore to be stable, and that's really the story.
All right, so how much oil is pumped from taxpayer-owned lands, and how much does big oil pay us for those rights?
This is terrible. I'm glad you asked, too. In the US, 30% of the oil comes from this country that is drilled from land that we, the Americans, own. It's ours, federal lands, or federal areas offshore in the Gulf. And the bids start at $2 an acre. They can go higher, but the point is why are they $2? And their 1987 prices back when oil was $15 a barrel. Why is it that this hasn't been revised? I don't know. They do pay royalties, but they're very low royalties, and we give away hundreds of millions of dollars of crude under a tax relief act from 1995 that has never been changed. So we're actually giving away a lot of our own oil, and then they're selling it back to us at a price you know what their price is.
Okay, so when these politicians are saying we need to open up these public lands for oil drilling, people say, yeah, we need to open up these lands. What they don't understand is that they do get opened up, or they do get used, but the actual revenues to the consumer who's lobbying and voting for this are virtually nothing.
Yeah, we're using more than we've used since 2003, and our benefits are no greater. In fact, I think it was the General Accountability Office said we're losing billions of dollars a year in revenue. That's money that would go to the taxpayers, to us, to build schools, improve healthcare, and we're giving it. It's a giveaway to oil. It's literally a giveaway.
Well, that's all right, guys, as long as they keep printing food stamps. Now, let's move on to the natural gas market. The king of natural gas, John Arnold, has retired. You're one of the last people to interview him. Tell us about the significance to his exiting the natural gas market.
Well, it means the natural gas market can't be gamed the way it used to be anymore. And in the US, we have so much drilling going on now with the horizontal drilling and the hydraulic fracturing, which, as you know, is very controversial. But it's created a glut that's destroyed prices. And we used to have very spiky gas prices, which is really the trader's bread and butter, because they buy low, sell high, buy high, sell higher. So he's out. He's going to do philanthropy from now on. I don't think he feels that he's going to make the kind of killing he used to. And this is actually a good lesson to America about what happens when a market is, when supply is actually kept in the US, what happens? When it's not exported, what happens to prices?
All right, now with natural gas prices in the US being so low, fracking with unmentionable chemicals is really not costed in there, right? You mentioned fracking, the environmental consequences. The cost of that is left completely off the books, right?
I am not quite sure how bad it is, but I do know that it's not transparent. Even if they are fracking on someone's land, like if you had offered your land to drillers, if there's a spill, the DEP does not let you know, and you cannot find out what kind of accidents happen on your own property. And what's so sad is people who are finding out about this, they don't care. They want more drilling on their land because they're addicted to the money they're making. Ordinary people making hundreds of thousands of dollars on the royalties. So it's bad. There's no imperative for transparency because people are just making too much money.
So Delta just bought a refinery from ConocoPhillips. Walk us through the strategy there?
Well, Delta, I believe, is now hedging. And it used to just be Southwest. Southwest was always kind of held up as this like beacon of progressiveness in trading because they were hedging. And Delta now is getting involved in hedging. So having a refinery, it just goes to show you that if you control supply and you're hedging, you have a huge edge over people who are just playing with the paper. So speculators who are controlling refineries, oil fields, pipelines, that is the stuff we want to be watching, because if you can control supply and you're trading, you can control parts of the market.
Right, so the airline is now going to be not having to engage in a lot of off-balance sheet trading of derivatives and hedge fund tricks. They got the refiner right there to draw from the refiner.
Yeah, if you're in a position where you can control refineries and pipelines and thus and such, it's going to be a lot easier for you to call the shots on the market instead of the market calling the shots on you. I would say what Delta's trying to do is regain control over an out-of-control situation in the best way that it can. It'll be interesting to see how it manages, how an airline is going to try to do something oil companies have been doing.
On the subject of refineries, there are not actually many refineries in the U.S., are there?
We have not had any new refineries built in the U.S. since 1976, and it is not really a good business to be in because these refineries are old, and it's like trying to get a hip replacement for your grandmother and she's trying to run a marathon. It's just, it's impossible. And so the problem is really trying to figure out how are we going to keep up with the demand that we have for fossil fuels. They try to do upgrades on these refineries, but it's very difficult to keep up with the demand in the U.S.
Also, interestingly, the U.S. now has a surplus of natural gas, and they can export natural gas, but they have no facilities to export natural gas. So are they going to be able to build facilities in time to take advantage of this natural gas surplus, or because fracking is such a tertiary tangential business that's going to go blow up in 18 months anyway, doesn't make any sense?
That's a good question as well. Well, I will point out that natural gas, I often see screaming trolls online being, oh, well, drilling for oil is okay because it'll be just like natural gas where it'll lower the price and wait and see. And the thing is natural gas is completely different because we don't have export facilities, whereas with oil, it's all about getting it out of here and getting a better price for it. So will they try? Oh, yeah. They're going to try.
We're out of time. Leah McGrath Goodman, thanks so much for being on the Kaiser Report.
Thank you for having me.
And that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I want to thank my guest, Leah McGrath Goodman, author of The Asylum, The Renegades Who Hijacked the World's Oil Market. If you want to send me an email, please do so at kaiserreport@rttv.ru. Until next time, Max Kaiser saying bye, y'all.